Yo, what's up, everybody? This is going to be episode one in a multi part series where I want to teach you guys the main principles on what it takes to become profitable. I will be uploading my mini course very soon on the YouTube channel so you guys could basically start learning a bit of my strategy. But this essentially is going to teach you guys what it takes, one of the main components to become a profitable trader. My credentials are I am a six-figure trader. I'm completely validated. I have FX book, all that. I could show anyone at any point in time. I do trade live, I do trade prop, and I've been trading in this industry for over 5 years. And I honestly can tell you guys, one of the main most important things when it comes to your trading is going to be number one, your risk management. Now, risk management is obviously a very over and underlooked thing in trading. A lot of beginners are not familiar with what this is. Trading is a very exciting thing when you first start. It's kind of like I remember when I started, I was just like imagining all the numbers. I was thinking, what can I do with this? Like I remember I had a friend that did a trade. Wasn't that crazy now looking at it, but he made a couple $100 on a trade, and then he immediately withdrew it to his broker, and then or from his broker, and he went to an ATM and then took it out from his bank in literally under an hour. So I honestly was just looking at trading as this thing that was like fucking printing money through an ATM. Basically, it was crazy to me. And once you start thinking about trading like that, it's very exciting and you could lose yourself very quick. And obviously, it took me a long time to figure things out like this because unlike today, where there's people like me that are making videos on how to trade and all that, back then the knowledge was limited. The only thing you'd really see on YouTube is like a guy who like will put new best trading strategy for gold, best strat, like bro, like literally like 300 strategies. That's not profitable. You can't be trading 300 strategies. Your strategy should work for one thing and just stick to it. So let me teach you guys a little bit about risk management and how you guys can incorporate it into your trading. So let's go ahead and look at this chart real quick, guys, and we'll jot down a very quick position. Just obviously it's past tense, but let's say we wanted to take a buy right here, okay? And let's say we move our stops over here, and then we have our take profit right here. So TradingView is a very popular and universally used platform. And what's great about TradingView is the charting. Okay. One of the most popular things you guys are going to see is this specific thing right here. It's called a long position. So you have long positions and short positions. I have them marked in my toolbar here, which you guys can access via, let me show you right now. Got a full screen right here, right? You guys will press right here and you guys can see all of these different things, right? The main one I'm using is going to be long and short position, and I haven't favorited. Once you favorite these, you guys can press on the star down here to open and close your toolbox. So that's a quick little tip for you guys. But anyways, let's go right back to it. This risk to reward is the most important thing you got to look at in this tool. So this tool is obviously going to show you by how many pips slash points your target is, which is for me green. You guys could obviously change the color if you like. And then my stop loss, which is where I would put, and tell my broker that, hey, once these candles reach this level, right? Once price is reaching this level, the second it taps right here, exit me out of my trade, right? The reason us traders do that is because you have to know when to call it quits, right? My strategy is able to analyze that, okay, right now where the market's directing, it's going to be a buy. But if for some reason my bias and my thought, didn't go as planned, once it reaches this level, that's just the level that I've personally designated that, okay, once it comes down to here, this is most likely an invalid trade and my bias was wrong, which happens, that's just part of the name, part of the game when it comes to trading. But you definitely need to have that. Why? Because since we're trading margin, most futures and forex traders are trading margin. So your wins are indefinite, but so are your losses. You could keep losing and losing and losing because so long as this chart is going down and you're still in your position, which would be a buy in this instance, you just keep losing and losing and losing and losing and losing to the point where you blow your entire account. So that's where risk management comes in. Risk management is literally in the name. It's managing your risk. As a trader, your strategy is going to have a certain win rate. I have a certain win rate in mind. And based off of that win rate, I need to have a risk parameter set that allows me to be profitable. Now, an example of it is going to be this. I'll pop up the text chart real quick for you guys right here. Let's put text and just start writing something down. So if I do one Well, let's say I do 10 trades, right? And then let me make this a lot bigger. Let's put it like this, like 28, right? Let's say I do 10 trades, right? But my win rate is a 50%. So that means every every two trades that I win, or let's say out of these 10 trades that I win, right? I'm going to win five, right? And then lose five, right? That means that if I am risking, right? If I risk $100, right, to make $100, right? That means I have a 1 to 1 risk to reward ratio. That means for this specific example right here, where I'm, doing 10 trades and I'm winning half of them, that means that out of the 10, right, 10 trades at my 1 to 1 risk reward, I'm going to, right, let's put this, I'm going to win 500 and then lose 500 because I won five trades, right? I won five, excuse me, and then I lost five. And that's going to leave me at a net total of zero, right? $0. And that's at a 1 to 1 risk reward ratio, right? But then let's copy this over and then let's do the same exact example, but let's do what a usual risk to reward ratio for me is going to look like. I am usually shooting for at least a 1 to 3, right? So on this same example where I'm winning half of my trades, right? Same strategy. My strategy doesn't change, but my risk to reward is now better. So instead of a 1 like this, I'm shooting for something like a 3 for this, right? So this will be the perfect example right here, right? Off of the same parameters, I'm now winning the same amount of trades, right? But now I'm no longer risking $100 to make three. I mean, to make 100. I'm risking 100 to make 300, right? Now, out of these five trades that I won, I'm going to win $1,500, right? Because my reward is a lot more. Every winning trade rewards me $300. So it's going to be 300 times five. That's going to be 1,500. But my risk stays the same. The amount that I put behind this position is still $100. I'm just letting it go a little further, right? So I don't lose any more, but I gain a lot more. So now instead of my profit being $0, even though I'm winning half of my trades, my profit is now going to be $1,000, right? I'm going to win $1,000 doing the exact same trade, just better risk reward. Okay. And obviously, risk management involves more than just risk reward, but risk reward is one of the most important things because it's your bread maker, it's your money maker. If you don't have a proper risk reward based off of your strategy, you're going to lose. Now, it doesn't mean at a 50% you necessarily need to have a 1 to 3. At a 1.5 risk reward ratio, you're going to be profitable. At a 2.0, you're going to be profitable. Hell, even at a 1.1, just you cannot be at a 1-1. If your win rate is 50% and you're losing as much as you're gaining, you're never going to gain any money. The only time a 1 to 1 risk reward works is if you have a win percentage anything higher than 50%. You can't be winning half your trades. You have to win more trades than you lose, at least by one, right? If your win rate here was at least, let's say, a 60%, right? If we do the same example right here, and then we have a 60%, let's look like how that would be different, right? You'd have a 60%. That means that you are doing 10 trades, winning six of them and losing four of them, right? Your risk reward stays the same here, 1 to 1. Let's say we didn't change our risk reward and you're doing 10 trades 1 to 1. So then that means you will win $600, right? Out of the six trades that you did, right? Won 600. And then you lost a total of 400, right? You lost four trades and won six, leaving you at a net total of $200, right? So in this example, we didn't up our risk to reward, right? Because maybe your strategy doesn't have that get that many big moves. Maybe you were more of a scalper. I know a couple of traders in the industry who are scalpers, which is basically people who trade at a much smaller interval. I usually am holding my trades or trading from anywhere from 8:30 to 12 p.m., 1 p.m., right? But some people don't do that. Some people are scalping the market, catching very quick moves from 15, 30 minutes to an hour. And usually when you don't have that much time to hold the positions in your scalping, your positions aren't going to be able to catch as much volume. So you might have to resort to catching a one to one, but that doesn't mean you can't be profitable, right? In this same exact example, the only thing that you need to have is a better, system. You need to have a better model that's allowing you to win more consistently and more than just half the time. So if you could win more than just 50% at the same risk to reward, which is this 101, which you're catching these small positions, you're going to be profitable, right? The whole thing is to be profitable. That's all that matters, because you could always scale the amount of capital you're putting, because $200 doesn't sound like a lot, right? But that's because you're risking $100 per position, right? Me personally, I risk $1,000. I have a live account which I've shown. You guys can be a part of my Discord. You guys will see that I post screenshots of it all the time. It's the account that I'm mainly trading on, but I also do trade prop. But even on prop, if we talk about it, for the hell of it, this same exact example, right? You could be making a whole lot more because I'm risking 10 times more, because I'm not risking $100 per position, right? I'm risking $1,000 per position, right? So then this will leave me at a profit of, if this thing could work, this will leave me at a profit of $2,000, right? The same exact thing. It's just I scaled the capital, right? The most important thing, right, is scaling capital, right? Why is scaling so important? Because yeah, we're talking about risk management, but risk management should never turn into a game where you want to risk more, right? If you have an A plus setup, sure, risk it. That means the setup that you have multiple confirmations. Again, if you guys don't know what that means, go watch my videos. I have a mini course. It's on my WAP. It's wap.com/zenithfx. I'll link it down below. You guys can watch that, but also be sure to try to upload this to YouTube. But scaling capital is one of the most important things also in risk management, because once you have your risk set, your parameter, right? This might be yours if you're a scalper, but mine looks more like this, right? Mine is usually a 1 to 3. I win at least half of my trades. I think I have more around like 70% win rate. So obviously my profit is a lot higher than most. Yours might be a little bit lower, or it might be even better than me. But as long as you're profitable, that's all that matters, like I said. But once you're profitable, you're probably going to be in a position where you're not making a whole lot, right? You are positive, right? You're in a green, but you might end the month at a positive $200, like I showed you here. So what you have to do now is, now that you have a proven model, get your money, right? I don't know what you guys do. Maybe you guys have some extra money saved up. Maybe you have a job, whatever, and go the prop firm route. It's honestly going to be the best way for you. I honestly recommend trading prop firms until you have at least anywhere from $10,000 to $20,000 to start growing a small live capital account. But if you're not there at that point yet, make sure you guys are scaling with prop firms. Get the money from the payout, save most of it. I'd say save at least 80% of the payout, and then the 20% obviously pay yourself out, because if you don't use the money, it's not to feel real. You guys have to enjoy the money too. That's the whole point of the fucking money. The whole point of all of this is not to just stack up as much money as you can and just die, right? You're not going to take this shit to the grave with you. This is to enjoy your life, to live your dreams, to be free, do whatever the fuck it is that you want to do, replace your job, use the money how you will, but also be smart about it, because you want longevity in the game. You want to be able to grow your account. I've seen so many people fail. I've seen so many people get payouts. I know people have gotten like $20,000, $30,000 payouts from FTMO, and to this day they don't even trade anymore. They quit trading already. Why? Because they blew everything. They blew their whole pot, and then they didn't have any money to keep trading prop, and then they just gave up, because it's a big moral blow, right? So that's why you got to save your money, because let's be honest, guys, you might not be able to keep that prop account forever. Whenever you get a prop firm account and then you start getting payouts from it, your next move should be to buy more accounts to scale your capital, right? Because if you are making, I don't know, $3,000 a month from a $100,000 FTMO account, you shouldn't be like, I want to make 6,000, so let me risk more. Let me risk double. No, you should think, okay, if my strategy is profitable and I could get payouts consistently and I could pass accounts consistently, I should get another $100,000 account, because then you'd be risking the same, right? If they say you're making 3% on that 100,000, which 3% on 100,000 would be 3K. All you got to do is get another 100,000 in that same 3% that you're risking. But obviously, put both accounts on a copy trader. You're risking the same 3%, but now you're making 6,000. It's a no fucking brainer, right? So hopefully this makes sense to you guys about how you should be doing your risk to reward. Remember, guys, do not ever falter. Do not ever fuck up on your risk to reward and your risk management, because this is going to make or break your strategy. Even if your strategy is profitable, if your risk to reward does not make sense, you will not make anything but sense. Okay, that's just how it is. So make sure you guys backtest your strategy, find out your win rate, and find out the average or find out the average volume that your positions are catching, right? So if you see that your positions are usually catching a 1-to-1, don't be like, let me just put a 1-to-3, right? 1-to-3, that's what I'm gonna do because this is magic. No, obviously your strategy doesn't work for catching big positions, right? You're probably not inclined for that with whatever strategy you're using. So don't go for a 1-to-3 because you're never gonna catch it, right? Your win rate might be 50% when a 1-1 doesn't mean it's going to be a 50% when a 1-to-3 because I'm catching 3 times the move. Okay. For me, I catch huge moves. I catch 1-to-7, sometimes 2, 1-to-10s. I catch some pretty fucking crazy shit because I like going for big moves. I go for the best setup of the week usually, and that's how I play it. That's why my win rate is so high because I'm not taking 1,000 positions a day, right? I take maybe 3 positions a week, and it works for me. But again, guys, find what works for you and stick to it. Don't fuck it up. But hope you guys enjoyed this video. Next video is going to be teaching you guys a little bit about psychology, which obviously it's not possible to cater to everyone. That's why I do my mentorships. But this is a broad thing that most people can apply, and I'm sure it's going to help a lot of you guys on your trading journey. But other than that, I hope you guys have a wonderful day. Stick to your trading. Don't fuck up your rules, guys, and let's get this money. Peace out.